So, let's talk about 2026. It's shaping up to be less of a fresh start and, well, more of a moment of truth, isn't it? We're going to dig into some analysis from The Economist and break down some of the biggest turning points facing the world right now. All right, so let's get right into it. It feels like the old rulebooks are just being torn up, you know? We're talking about massive shifts everywhere. You've got the crazy pace of AI, the super high-stakes green energy transition, the return of industrial-scale conflict in Europe, and even a huge shakeup at one of the world's most famous companies. Basically, a lot of the things we took for granted, they're now up in the air. And that really brings us to the core question of this whole explainer, right? What are the actual make-or-break battles that are going to define this year? You know, where are the real fault lines, and what can they tell us about where we're all headed? So to get our heads around this, we're going to look at 4 really crucial stories. First, the incredible pressure on the AI darling OpenAI. Then, Europe's big dilemma between its climate goals and its security. After that, how the continent is racing to rearm. And finally, we'll look at what seems to be the end of an era for the legendary investor Warren Buffett.
Okay, first up, OpenAI's greatest test. This is a huge one. It's really all about whether the company that gave us ChatGPT can actually turn all that world-changing hype into a real, sustainable business.
And let's be super clear here. The stakes could not be higher. I mean, OpenAI's rise has been absolutely meteoric, right? But now comes the really hard part. That explosive growth phase, it's pretty much over. And now, the company is staring down some seriously massive challenges.
And this right here, this kind of lays out the central conflict perfectly. You could call it the OpenAI paradox. On one side, they've got these incredible advantages, right? They were the first mover, they've got the full backing of Microsoft, and their revenue has already blown past $1 billion a year. But, and it's a big but, the hurdles on the other side are just enormous. You've got fierce competition from Google's Gemini, they still haven't proven there's a real path to long-term profit, and the costs of running these things are astronomical and they're only getting bigger.
Yeah, just to put a number on those costs, leaked figures suggest OpenAI's losses could rocket up to a jaw-dropping $700 billion. I mean, think about that. That isn't just a hurdle, that's an existential threat. And the reason is simple. The sheer cost of the computing power you need to train and run these massive AI models is just off the charts. You simply can't keep losing money at that rate forever. It doesn't matter how revolutionary your tech is. So what's the game plan? How do they survive this? Well, it looks like a 3-pronged attack. First, go out and raise an almost unimaginable amount of new cash. We're talking potentially up to $100 billion. Second, try to control their own destiny by developing their own custom AI chips to slash those computing costs. And third, and this is a really interesting move, they might become a kind of app store for AI, distributing not just their own stuff, but even models from their rivals. It's an incredibly bold, high-risk, high-reward strategy.
Okay, let's pivot to our second story, which builds on this theme of reckoning. We're talking about Europe's green dilemma. And what you have here is a direct clash between 2 really urgent priorities, saving the planet and securing the continent.
And it really does boil down to this one question: clean energy or national security? Because in the race to build a green future, especially with wind power, do you go for speed and low cost, or do you prioritize your own strategic independence and security? The tough part for Europe right now is that it seems they can't easily have both.
This table really lays out the dilemma perfectly. Look, on one side, you've got Chinese-made wind turbines. They're cheaper and you can get them faster. That would help Europe hit its ambitious climate targets way sooner. But on the other side, relying on them completely undercuts Europe's own manufacturers. It creates this huge strategic dependency on a geopolitical rival, and, this is the really alarming part, it comes with some serious security risks. We're talking about the potential for embedded spyware or even the ability for them to be shut down remotely.
And we're not talking about small change here. The financial stakes are absolutely staggering. The EU is on the hook to spend 600 billion euros on its offshore wind capacity by 2030. So with that much money on the line, the decision of who builds this critical infrastructure, well, it's not just an economic choice anymore. It's one of the biggest security decisions the continent is facing.
And that security question leads us straight into our third reckoning, a continent rearming itself. You have to remember, for decades, Europe cashed in on a peace dividend after the Cold War ended, slashing defense spending. Well, that era is officially, definitively over.
This timeline really shows you just how dramatic that shift has been. After 1991, defense just fell off the priority list. Then, boom, 2022. The invasion of Ukraine was this brutal wake-up call, and it revealed that Europe's defense industry was basically hollowed out.
So now, here we are in 2026, and there's this desperate scramble to rebuild, especially in the not-so-glamorous but absolutely vital area of explosives and ammunition.
And this isn't just some abstract policy being debated in Brussels. It's happening right now, on the ground. You have entrepreneurs like this Swedish guy pouring hundreds of millions of euros into building brand new factories in places like Finland. They are literally in a race against time to fill a critical gap that's been ignored for 30 years.
And wow, this chart just drives home how urgent this is. The gap between what Europe needs to feel secure. We're talking 20,000 tons each of critical explosives like TNT and RDX, and what its industries can actually produce right now, it's massive. Closing this ammunition gap has become one of the continent's single biggest industrial challenges, period. All right, for our final story, we're going to shift gears a bit, from geopolitics to the world of high finance. But the theme of a great reckoning? It's just as strong. We're looking at the legacy of the one and only Oracle of Omaha, and we're asking a question that has been on people's minds for years. What on earth happens to Berkshire Hathaway after Warren Buffett? I mean, just look at this chart. It pretty much says it all, doesn't it? For decades, Berkshire Hathaway didn't just beat the market, it absolutely trounced it. This incredible performance has been the gold standard for creating long-term value. But it begs a huge question. How much of that magic is tied to the unique genius of one man?
Because Buffett's successor, Greg Abel, isn't just inheriting a bunch of companies. He's inheriting this, a cash pile of $380 billion. That is an almost incomprehensible amount of money. What he decides to do with it, how to put it to work in a world without Buffett's once-in-a-generation deal-making instincts, well, that's going to be his defining challenge and his biggest opportunity.
You know, this quote from Buffett is so telling. He's talking about why he shut down his first fund way back in 1969, because he felt out of sync with the market. And that right there captures the unique, often contrarian philosophy that built this entire empire. He has always played a completely different game from everyone else. The billion-dollar question now is, can anyone else play that game, or will the new guys be forced to change the rules entirely?
So, at the end of the day, we're left with these huge open questions. Can the company's famous hands-off, decentralized culture actually survive without him? What will his successor, Greg Abel, do differently? Will Berkshire, for the first time in forever, actually start paying a dividend? And of course, the biggest question of all, can anyone, anywhere, really replicate the Oracle's magic?
So when you pull back and look at all four of these stories together, you start to see the common thread, right? The idea of an untouchable tech giant, a smooth, easy, green transition, a Europe that's permanently at peace, a corporate empire that can last forever. All of these old certainties are just gone. 2026 is a year that's being defined by their absence.
Which really leaves us with one final thought. Every single period of great disruption and instability also clears the path for something new to grow. So as all these old structures begin to falter, maybe the most important question for all of us is, where are the next great opportunities going to come from?
Thanks for joining me for this explainer.